6:36. We check back in now with Mike Eppel over at 680 News. Thank goodness it is Friday for the markets. It's been a tough week.
Yeah, that's an understatement, I think, Tammy. Good morning. The Dow Jones Industrials average coming off its second quadruple point decline of the week. We've never seen prior to this week a decline of more than 1,000 points on the Dow, and it's happened twice now in 4 days. Of course, back on Monday was the first, and then we saw the big bounce back on Tuesday. Wednesday saw some wild swings, and then yesterday another sell-off of 1,032 points for the Dow. 5-day decline for this market stateside of about 8%. It's now actually 10% below its peak, so it is an official correction, which from a technical standpoint is actually not a bad thing after that more than 30% gain that Wall Street experienced in 2017. Correction could have been predicted and expected, and to some extent was welcomed by some who have been long watchers of the market, saying every once in a while the market does have to pull back. Can't always go up in a straight line. What's triggering it? Well, risk of inflation, rising bond market yields, some questions whether or not corporate profits have peaked. The TSX has been a tremendous underperformer, and just from a comparable standpoint, the TSX opens this morning for the year down 7%. And if you look at the actual chart on the index, it's back actually below where it was at the peak in 2008 before the financial crisis here. So sort of a break-even proposition if you bought right at the peak back in 2008 to where you would be today on an index fund, for example. We did have a brief government shutdown in the States. They finally settled, though, on a budget measure this morning that could fund the U.S. government for the next 2 years, but at the same time take on another $1 trillion in overall debt, which is, again, raising the specter of higher interest rates going forward, and, again, another negative for the market. Who would have guessed that in a day that saw Wall Street fall sharply, Twitter would have been the stock to hold? Shares of the social media company jumped by more than 12% yesterday, at one point up by more than 20%, as Twitter reported its first ever quarterly profit, as the adoption of larger character space on tweets and more videos has helped bolster the bottom line. And failing New York Times, not so much, as Donald Trump likes to call the New York Times in its criticism of that media juggernaut. They just reported $1 billion in subscription fees, and 60% of that coming from online. So the media may be seeing a benefit of the tumultuous times that we're seeing in U.S. politics. We'll send it back to the studio.
So we hear Donald Trump taking credit for a lot of things. I think he can probably take credit for the last two stories you talked about, Twitter having right. a good day, and so same with the failing New York Times.
Yeah, it'll be interesting to see if he actually does take any credit for that, considering he probably won't. No, it's so confusing and convoluted, Kevin, when we come to talk about these kind of things.
I'm looking to the side here. I'm seeing the futures for both S&P and the Dow are both in positive territory. Up 56 points for the
which is
Dow
actually
futures.
Really lackluster, quite frankly.
It is lackluster. What happened around 5:30 this morning when they finally passed the spending bill, when they realized they're going to be borrowing $1 million an hour?
Yeah, it's, you know what, that has been in the ranking of things that Wall Street's worried about right now. Government spending isn't near the top of the list, but it's a positive if, in fact, we don't have to talk about it for the next 2 years, where we actually have a little bit of political harmony and the two sides working together. It's not a bad thing.
Yeah, it's kind of an impossible thing, though. Okay, thank you, sir.